Hey guys, I'm Leon with the Lending Group. I've been in the mortgage industry since 2002, headquartered in Bucks County, Pennsylvania. We do loans all over Pennsylvania, all over New Jersey, Delaware, Florida, and many more to come in the near future. A lot of times people ask me, well, hey, I just bought a house. Can I buy another one now? Sure you can, but it depends, right? Most of the time, if you're just bought a home, you're most likely buying the second one for investment purposes and or rental cash flow. As long as your income, your personal income, is enough to qualify you for the home you just bought, for the liabilities you already have, like your car payments, your credit cards, student loans, whatever else that you may have in your credit report. All we need is the rental income for your new property, and then you can buy the next one. So that's what a lot of folks don't realize, is that we're going to be using the rental income from the property that you're purchasing to qualify you for the loan on the property you're purchasing. It's really that simple. Now, granted, the rental income has to make sense. It has to be a market rent. It needs to cover your new mortgage, right? If it doesn't cover your new mortgage and your income is not enough to qualify, we may ask you to put more money down. But that is really something that's almost always custom tailored and almost always different from property to property to property. And guys, just so you know, rental income for home buyers is not just for investment property home buyers. If, for example, if you're a first-time buyer, and or if you're buying multiple times, it doesn't matter. If you're going to live in the property, for example, you're buying a two-family property, you just need to qualify for half, as a rule of thumb, right? So if your income is enough to carry half the debt, the other half the debt can be carried by the future rents in the property. So the future rent thing is very cool. It's money that you're going to get, and it's money that we're approving you for upfront. So multifamily living, also a way to use it, whether it's investment and or primary home, you can definitely use the future rents. So the natural question is, well, how do you determine the future rents? Well, it's so simple. Obviously, the seller usually tells us what they are, whether they're over market, under market, or just at market. The appraiser is going to decide, right? So when we're appraising your property, we're going to also order something called a rent schedule, and it's going to tell us what the market rents are, or what the comparable market rents are in the area. And as long as it's a fair number and within, a medium range, you should go right through underwriting, fly right through. So guys, one simple thing I could tell you about future rents and rental properties, if you look at graphs and charts and various self-help books and or investment books, the general consensus is just buy real estate, right? Just buy it. It's going to go up in value. You can use the rents to pay for it and hopefully build yourself another nest egg. So definitely a good way to grow wealth. So if you're looking for an investment property, don't be discouraged. As long as you have the down payment, as long as you're ready to get in and become an investor, to become someone that is expanding their real estate portfolio, give me a call, right? Feel free to reach out. Find My Way Home Network and or apply with Leon.com.